Hello traders, this is the DAX recap video for January 22nd, for Tuesday, and this in front of us is the updated chart with adjusted support and resistance zones that was posted before the open. So in my morning notes, beside this first part, getting to know what is happening, what is the news we had and so on, here I said something about invalidation, the breakout, that the market that will go below this breakout area, below the line in the sand, to fill this gap from January the 17th will probably invalidate this breakout. And the most important part here is that this space here around 250 points was really before a fast zone in start of December. At December 5th and 6th, market just went through it, gapping down in a very fast manner, and there wasn't really a time to make good support and resistance zones. So each and every of these zones between the main support and resistance zone are to be considered as a minor zone and should be used with market context. Will have help of fibs and other references such as cash flow gaps and pre-market high and low. So that was the way to use these zones in between for today. Now let's get to the charts. Now imagine that you have a chart like this. So this is a blank chart where you got no zones, no lines, no indicators, no nothing. And I'm sure that the new traders and the people that are new to trading will scratch their head in wondering how they could make money with this, and this could be looking to them just like some kind of gibberish. But you know, when you turn on your lines and when you have some zones, then you will get structure to your charts and you will know how to navigate it, and you know where to enter and where to exit your trades using the context with these zones. Also using additional references like I will show you for today. So this here is the start of the pre-market session, start of the future session. This is the regular trading hour open. And when you observe this first period, pre-market, then you should be able to draw yourself lines like pre-market low and of course a pre-market high. Now you will get two additional references such as pre-market high and pre-market low. Observe that pre-market high is in confluence with previous cash close, very close to it, and they both are inside this zone. So when market opened here at 9 a.m. it made a push to the pre-market low, and you could also draw yourself this kind of line here. You will get the confluence of many factors, so to say, here, and observe that the market just tested the pre-market low here. So this here could be an entry for you to attempt a long trade or to wait and later to jump in a pullback to the zone. And I will place another circle here just to additionally point to this area here. So entries, let's go to the 1 minute chart. Entries for today. So these are our zones of interest, so to speak. So here is the open, and pre-market low was very close to the open. Pre-market low was made at 8:15, let's say. Pre-market high was made at 2:30 a.m. At the open, market tests pre-market low, goes just a few points, 2-3 points below, and immediately go upside. So you could enter here, but for this entry you should be very quick and decisive to go long here, because we know that the market made a breakout, and that the buyers who missed that and the traders who missed that, they would of course like to join that party, and they would buy the first pullback to some of the decent zones. In this case, you could look at the slightly bigger time frame, like 5 minutes, 15 minutes, half an hour, whatever, and draw yourself a fib to not only to this breakout move, but for this entire swing, and to observe where you could get a confluence. And you can see this is the halfback, and later they tagged this halfback, this zone. So you can use these fibs also. Then you can use another fib if you would look to the daily chart, and this breakout candle, usually when you have a candle that is very large, that is engulfing candle, which means it engulfs these other candles. In this case, this was a clear breakout from the tops of previous days. Market is prone to make a pullback fib retracement of only this day also, and it could usually be a pullback to the halfback of these larger candles. So you could even use a fib just of Friday like this, and then to seek confluence with fibs and your reference points and zones. And now we can observe that 61.8 fib of Friday is really between this zone and pre-market low. So you could use those also as some kind of help, and note that DAX would not tag those kind of references like fibs to the point. You should know that, and react if there are confluence of some other things, like references like pre-market low, high, cash close, zone, or trend line. You could make this kind of trend line and observe that you have confluence here with pre-market high, cash close, and zone here. So when you are entering a position, long position here on the pre-market low, your target should be at least pre-market high. You don't know in advance is it going to stop here or not. There could be just a shallow pullback and then a continuation, but it is up to you to judge the kind of move you get to this. If you see a sustained and strong momentum, then you could even hold and stay in a trade, and stay in that possible chop or shallow pullbacks and expect a higher move. Today that wasn't really the case, and you could see that by the market moves, how the market was moving. So either you are going to long here, or maybe it is easier way to jump into this long trade. The way I did it, I let this first open drive higher to pass, and then jump in on a pullback here. And it was a pullback to the zone, one reason, and also I jumped into this smaller halfback. 38.2, halfback, 61.8, whatever fib retrace you use, it's going to be good enough. Usually 38.2 or halfback is good enough. Maybe you will not get a deeper pullback than that. After the good momentum push to the upside, if you believe that the market is going higher, if you believe that the gap is going to be filled, which was a logical thing to assume, because we had a huge move to the upside, we had a breakout, and now we expect the buyers to buy this first pullback. What is going to be next? We don't know that. So we don't know, are they going to make a higher high, lower high, or just a small reaction then total collapse. But what we do know is that odds are saying to us that they most likely are going to buy something, some kind of pullback, and we have to be ready for that if we want to participate in that kind of move. So this was our entry points, here or here, and targeting a gap fill, targeting a next zone, and gap fill was right besides premier previous market high. So it is not unusual for the market to enter after a big move to some kind of consolidation phase and to be range bound, and in that case you will go zone to zone and exit your trade, let's say here. And this trade here was good for around 35 to 50 points, depends where you entered and where you closed. If you entered like here in this at this zone, you could get even 60 points to the upside, but if you entered here, then you will get 40 points to the upside. And later, observing, this market was spending here a couple of minutes, enough time for you to decide should you go short this or not. And the reasons for shorting is the multiple different resistances here, and you could enter a short here with a fairly small stop, like 20-point stop, expecting it to get to at least this lower zone or even to test the pre-market low again. So this here is a short trade with possible closing here at the zone. Just take 2R and run for the hills kind of trade, or if you are more patient, you could close it here. So even if in this kind of environment, like sideways choppy environment, there were two 2R trades available for us, and even this here could be a nice long trade, zone to zone based trade, if you observe that this here is a to the point halfback of the entire up move. So this here is our additional trade using fibs and going long from here to the next zone for additional 40-50 pointer. And you should really take this first trade, especially if you already banked 2 winners or at least one of those. And even one of these trades could be good enough, even 1 plus 2R trade could be good enough for such a day. Again, if you go to the slightly higher time frames, observe that this dip to the zone, and just know that the zone itself is a good reason for us to trade, especially if we are having additional reference such as fib, as said here. Cash close gaps, pre-market high low, additional references. It means fibs retracements also. On the higher time frames, so DAX is basically now here at the breakout area. This is DAX testing it. This is S&P, which is also going down currently to maybe test its own breakout area. Nasdaq, Russell, they all look the same. On daily chart we have a back tested, as said in the previous videos, that maybe DAX will back test daily 50. It happened today, and when you observe the situation on the S&P, it's going down. It has filled some gap from January 17. Nasdaq went below, Russell went below. When you observe the headlines, there you go, global economy slowdown. So global economy slowdown basically doesn't exist on the breakout days, but on every other day it is a media excuse, to describe to us when the market making a technical pullback. So markets are making pullback to the breakout areas. There's nothing strange about that. And tomorrow you will get another updated chart with updated and adjusted zones. I wish you good trading and good night.